So in this video, I want to talk about um, hard assets, hard money, hard currency versus soft currencies and soft assets. And I want to talk a little bit about what those are and why it's important um, as it relates to Bitcoin. And I think as we have these conversations and talk about these concepts, hopefully become increasingly clear. Um, why I think Bitcoin is going to play such a big role in the future. So, if you think back to really any asset or any currency that has ever been used in the history of the world, um, typically they start as hard assets or hard monies, and what that means is they are finite, or the supply is relatively limited and can't be increased or decreased in a really easy way. We'll get into an example in a second. So there is supply stability, which in turn creates kind of price stability, which is very useful for currency, because if you had price instability or volatility, it'd be very hard to transact in that. Think about, like, if the U.S. dollar price volatility changed dramatically from a day-to-day or week-to-week basis, you wouldn't really want to transact in it, because um, you might be overpaying or underpaying, and it's very difficult to kind of realize kind of fair market rates when currencies or assets have huge price instability. So the nature of a hard asset or hard money means that it's you don't see these huge increases in supply or decreases in supply, um, and and price remains relatively stable over a period of time. So let's get into an example. So let's start with gold. So gold is a metal, rare earth metal. It's found in the earth. Uh, in and of itself, it doesn't have a ton of value, but human civilization has kind of adopted it as both a currency and a store of value because of certain properties that it has. So it is um, difficult to create, right? So it takes a huge amount of effort and manpower and machine power to extract it from the earth. So there's a huge barrier to create more of it. There's a relatively fixed supply of it because of that, the work required to extract it. We don't see a decrease, typically don't see a decrease in the supply, because unlike other metals, we don't use it um, for to create things, right? We just we leave it in its kind of rare form, or maybe jewelry is obviously jewelry and decorations. We use it for those types of things, but we don't use it as a commodity and a consumable like we do for many other precious metals: copper, tin, aluminum, name your silver even, are used in various products and industries, and therefore the supply can decrease as we use it, differently than the supply of mining it out of the earth. Gold isn't like that. We typically either leave it in bars, either in its kind of raw form, bars, coins, jewelry, etc. All of that can be melted down into its original form. And so that property, um, there's a solid supply of it. The supply doesn't increase or decrease rapidly. I think it's been estimated that even if gold miners wanted to commit all their energy towards extracting more of it out of the earth, the supply could only really be increased by roughly 2 to 3% on a given year, and that would require an enormous amount of money and effort to do so. And so because of that, the price of gold doesn't see these huge swings over long. It goes through cycles like any other asset, where the price might increase and decrease over these long periods of time. But on a given day, week, month, year, there's a lot of price stability, and the sentiment about gold is pretty stable. We believe it's a worldwide store of value, and so that's a really good example of a hard asset. And so let's now pivot to a soft asset. So Or let's tie this to the dollar, and the dollar when it was originally created versus the modern dollar. And so paper currency was created mostly for its portability. So it's gold and precious metals and these other objects are very difficult to transport because of their weight. And so paper currency was created to solve that, right? So the US dollar was created to represent a certain amount of fixed gold, right? So it was backed by gold. And you could bring that paper note with you and you could transact in that, and that would represent a certain amount of gold or the hard asset. And so there was a lot of value in the US dollar because it represented and it was backed and supported by a hard asset. In 1971, President Nixon in the United States decided to move away from the gold standard, as many countries and empires have done in history, have untethered their currency from the underlying hard asset. And so that seems great because you can create more dollars, you can expand the economy, you can pay for things like wars, but it's not good because you have now created a soft money or a soft asset, which was previously hard. And so the supply can be increased or decreased, frankly, infinitely, and that can have dramatic impacts on the purchasing power or value, the store of value that the underlying asset has. And so that's an example of the modern dollar, or the fiat currency, is a soft asset because as we've seen in the last few months, couple of years, the supply of it can be increased dramatically, and so it isn't difficult to create more of it. It isn't difficult to destroy it, and that can in turn have significant impacts on the price volatility. And as what typically and what we're seeing is that shows itself in inflation. So when we create a lot of dollars, what that does is that inflates the dollar and it decreases the purchasing power of the dollar. So last week's CPI report was 7.5% year-over-year inflation. That has been 6.5% to 7.5% the last several quarters, which means every single year the value of $1 or $100, et cetera, is going down by at least 6 or 7% in real terms. That is a significant problem and not something that's really sustainable. So those are kind of the differences between a hard asset and a soft asset. Now, why does that relate or how does that relate to Bitcoin? So Bitcoin was created as a software protocol, and in the code that is run across the tens of thousands of Bitcoin nodes or computers that run all across the globe to help support the network, to have a fixed amount of supply. So there is a fixed amount of Bitcoin that will ever be created, and they're released and created on a kind of an inverse logarithmic kind of chart. So there was a lot of Bitcoin that was created originally, early in its in the first few years of Bitcoin's existence. There was millions of Bitcoins created. But that caps, and the supply of Bitcoin increasingly slows down such that fewer Bitcoin is released into the network over time. And that will cap at 21 million Bitcoin. And when it hits 21 million Bitcoin, that's it. There will never be another Bitcoin created. And so it's a little difficult to wrap your head around this, but compare that to gold, and it actually has a lot of characteristics that are similar to gold, in that there is a fixed amount or relatively fixed amount. It becomes, as more of it is created, so as we extract more gold from the earth, it becomes even harder to find and mine the rest. And same with Bitcoin. There is over time, fewer and fewer Bitcoin is released. The demand is increasing, and so your supply and demand dynamics are very similar to gold, other than the fact that gold is far more widely adopted. But it is essentially a digital representation of gold, in that you can't increase or decrease the supply really at all. Never mind a little bit. It's on a fixed supply release schedule, and that makes it a very hard asset. Even though it's again, you have to draw parallels. There's nothing tangible about it like there is with gold and other metals and things like that. But as we've seen, really in the last 20, 30 years, a lot of what we've been accustomed to in the tangible and physical world has been adopted and changed to the digital and electronic world, and Bitcoin is no different. So yes, you can't reach out and touch Bitcoin, but it has many of the inherent properties that something like gold or other hard assets have, which again, as the adoption of it increases, will make the price of it and the value of it continue to rise until adoption reaches kind of maximum levels like it has with gold, in which case you'll see price volatility, which is many critics of Bitcoin say that it's too volatile, and that's because it's early. That's because it's going through its initial adoption phase. And if you look back, the early adoptions of many currencies saw price volatility early on, until adoption reaches kind of maximum levels, in which case price stabilizes. So as the supply of Bitcoin slows down and diminishes, or gets closer to reaching its maximum levels, and as adoption worldwide increases and starts to slow on a annualized growth rate, the price of it will stabilize, increasing its value as a currency, because people will be more inclined to transact in it because of that price stability. So that's kind of a primer on soft and hard currencies and assets. That's a little bit of a comparison, again, from gold to Bitcoin. We'll probably touch upon this topic again in a future video, but it is an important concept to understand, in that it is a fixed supply. It is the supply of Bitcoin becomes released in a slower and slower fashion until it reaches that maximum of 21 million. And as as demand increases, that is what will likely push the price of Bitcoin higher until it reaches its point of stabilization, which is expected to be many, many years away, because the best estimates are, maybe 5 to 10% of the maximum adoption of Bitcoin has happened to date, but there's a long way to go for individuals, businesses, governments, etc., holding Bitcoin on their balance sheets. And so we have to continue to go through that adoption phase, which will continue to see price volatility, but should likely see dramatic appreciation in the years to come. And there is no worry about supply unexpectedly being increased or decreased like there is with many modern fiat currencies. So hopefully that was helpful. Drop a comment in the below if you need a little bit more clarification on that. And again, we'll probably touch upon this same concept in a future video, but just wanted to kind of ground us on the same page about Bitcoin being a hard asset, and comparing that to some soft and hard assets that we have a little more familiarity with. So all right, thanks for watching.